U.S. stocks rising this Wednesday, helped by gains in tech stocks after the S&P 500 ended a 7-day winning streak the previous session. Apple and Amazon both up double-digit percentage returns over the past month, far outpacing the S&P 500's 2.8% return. Defying many predictions, the 10-year Treasury yield falling to 1.306% today, while in Europe, the European Commission indicating that it expects Eurozone GDP to grow by 4.8% in 2021. Meanwhile, in the Forex market, the euro-dollar's where we begin. That's under pressure. As long as the resistance at 118.40 is not surpassed, the risk of a break below 118.05 remains high. Short positions below 118.40 are favored, with targets at 118.05 and 117.90 in extension. The British pound US dollar pair, that's under pressure, while the dollar yen sees its key resistance 110.80. The Bitcoin dollar sees the upside prevail as long as 33,815 is the support, 33,815 also the pivot point, while gold sees further advance. The relative strength index mixed with a bullish bias. Long positions above 1796 are favored, with targets at 1815 and 1825 in extension, while silver sees a continuation of the rebound. Our new trading week is about to kick off right behind me here at the New York Stock Exchange. It's an abbreviated trading week with the U.S. markets closed on Monday for the 4th of July holiday, and investors, they're continuing to wonder whether or not last week's rally for the S&P 500 and the NASDAQ will carry over, because last week the rally was historic. It was a record high after record high after record high. This due mostly in part this following strong data on vaccine deployment, looser COVID-19 restrictions, strengthened tech, and reopening stocks, and especially Friday's June jobs report that showed an accelerating recovery for the U.S. labor market after the economy added 850,000 jobs, well above expectations in the previous month's read. But now it's time to look ahead. A new week is about to kick off. Are we going to see a continuation of the gains, or are we going to see a reversal of fortunes? Let's now take a look at what will likely move the markets in the week ahead. Now on Monday, we kick off a bit on the quiet side. First, we have the release of market services and composite PMI reads throughout the European continent, data which includes Spain, Italy, France, Germany, the United Kingdom, and the Eurozone region itself. While right here in the United States, the markets are closed for the 4th of July, Independence Day holiday. Now Tuesday kicks off down under with the Australian interest rate decision. The Australian RBA interest rate decision expected to remain unchanged at 0.1%. Then it's off to the Eurozone for May retail sales figures. That calls for a read of 4.1% month over month, while right here in the United States, we will see the release of bill auctions as well as June ISM services PMI. That's expected at a read of 63.5. Wednesday kicks off in Germany with that nation's industrial production read, but most focus will be right here in the United States, as in the afternoon hours we will see the release of the FOMC minutes. Then on Thursday, we take a look first at Switzerland. The Swiss unemployment rate is due out. Expectations call for the June read to come in at 2.9%. While right here in the United States, we have the release of the weekly initial and continuing jobless claims figures. And then we end the week on Friday off in China. While right here in the United States, While here in the United States, we have the release of both the weekly initial and continuing jobless claims figures. And then it's Friday, and Friday we first begin in the nation of China with that country's consumer price index. Chinese consumer price is expected 1.4%. And then it's off to the United Kingdom with a combination of May industrial and manufacturing production figures, but we also have the release of British May GDP. British GDP, that's expected at 1.7% month over month. British May GDP, that's expected at 1.7% month over month. And that's not all, because we end the week in Canada. Yes, Canada, we will see the release of the June Canadian unemployment rate. That figure, that's expected 8.2%. 8.2%. So there you have it. Keep an eye on all of those headlines. So there you have it. Keep an eye on all of those headlines. So there you have it. Keep an eye on all of those headlines. And until next week, live from the New York Stock Exchange, I'm James Sweeney, reporting for ICM.